Hey everybody, in this video I'm going to solely go over psychology, which is the most important aspect of trading. There's a huge misunderstanding in trading community that the most important thing is your setup and all this, and not a lot of people talk about psychology, even though psychology is the absolute most important aspect of trading, because if your psychology is not in order, it doesn't matter what your system is. You will chop up your account, or you'll just stay stagnant and just win, lose, win, lose, win, lose. So I made a set of notes here that came mostly from this seminar here by Mark Douglas. There's 4 videos total, and I encourage you to watch them all. It's actually about 5.5 hours long. There's a lot of good stuff in there that I won't touch on in the notes, just kind of some back end stuff. But so Mark Douglas is probably one of the best trading coaches of all time. He traded through 80s, late 70s, 80s, all the way up to about the 2000s, and he actually passed away a few years ago. But he wrote Trading in the Zone, and I think it was called The Disciplined Trader was the other one. But so psychology again is just the most important aspect. It's because again, if you just don't have your psychology in order, it really does not matter what your system is. But if you have your psychology in order, you could even have a 20% win rate and still be profitable, consistently profiting, if your risk reward is there. And that is absolutely terrible. If you have a 20% win rate, you need to find a better system. A minute ago I said it really doesn't matter what your system is. That's true. But the thing is, you want to find a profitable system. You want to find a system that's 50, 60, 70, 80% win rate. But so I'll get into this. So I'm going to go I'm going to read a couple points, and then I'll talk. That way, I can just kind of sum it all up at once, rather than just talking about every point. So number 1, do not have any expectations other than the fact that something will happen. Number 2, always determine your risk. Number 3, take every setup within your trading methodology. It does not matter what order you win or lose, because the series is what matters. You cannot pick and choose. If you pick and choose, that means you think it will be right. So I'll first start off by talking about point 1 and 3. So let's say you have your trading methodology, which is your pattern or whatever it is, your signal for your entry, right? So you should have strict criteria for that. Should be very objective, very simple for what you're looking for, and so you need to start thinking in the aspect of trading is a series of trades. Whether it's 20, 50, 100, whatever. It's the long term. It's not trade by trade. It's not a trade by trade basis. One trade should not make you, and one trade should not break you. So, kind of think about this analogy. Actually, first let me talk about this. So, point 6, it says there are 4 possible fears when trading: being wrong, missing out, losing money, leaving money on the table. So traders, a lot of times when they see, let's say they see a potential trade and it meets all their criteria, but they're just like, I don't really think it's going to go that way. So they choose not to enter. And then eventually it goes the way they thought. And then they're kicking themselves in the head, like, why didn't I enter? Well, the thing is, you can't pick and choose, because you can't have any expectations, just like point 1. You can't have any expectations other than the fact that something will happen. And if you pick and choose, that means you think it will be right. There's no right and wrong in trading. It's just when you have a specific methodology, it's just all about putting yourself in a situation where you have a higher probability of being correct, being not right, but being in a winning trade a certain percentage of the time, whether it's 50, 60, 70, 80%, right? So the thing is, you have to, when all your criteria is met, you need to enter the trade. You just have to, because you may not win that trade. You may not win the next one, but you may win the one after that. You may go on a winning streak after that, and then lose one. It's all about a series. So, think about this analogy, right? Let's say that a company or a university or whatever, they're doing a survey. And let's say that the survey is, to qualify to take the survey, you have to be 18 to 22 years old. You have to, let's say, live in Michigan, and you have to trade Forex. Let's just say that's the criteria, right? Let's say it's a 100-person survey. Okay, so the people who are putting on the survey, when somebody is qualified to take that survey, they meet all the criteria. They're not gonna push people away because they think, oh, you know what, that person, I don't think they're gonna support my theory. I don't think they're going to support my theory, so I don't want them in the survey. That makes no sense. That makes absolutely no sense. And it's the same thing with trading. If you're trading over, if you have a series of 100 trades, if all your criteria is met, you can't just be like, you know what, I don't think this one's going to be right. I don't think I'm going to win this one, so I'm not going to take it. That's just not how it works, So you have to have strict rules for yourself, very, very objective. So when all your criteria is met, you just enter. And then, like point number 2 says, you always determine your risk. And that's the key here. You can't risk too much. I mean, everybody has their own certain risk parameters, but you can't risk way too much because, again, it's a series of trades. It's not a trade-by-trade basis. So 5, it only takes one trader somewhere in the world to negate the positive outcome of my edge. Again, when you win, you are not right. When you lose, you are not wrong. Okay, right here, point 9, I already said this, but all that technical indicators or price patterns do is put you in a situation where your probability of winning the trade is higher. Consistent winners do lose trades. I'll talk about this one real quick. There's this other misconception that consistent winners, they only win all the time. Especially with the influence of social media. A lot of times traders just only want to show their wins. And I applaud the people that show their losses as well. To being honest, but it's just totally incorrect if you think that these consistent winners don't lose trades. Everybody loses trades. So now going back to what I was saying a minute ago about the series, it makes perfect sense, right? It's there's nobody that's an exception to the rule. There's no trading methodology that's a 100% win rate. It's not possible. Okay, we're here. When you get a signal from your trading methodology, stop thinking. There's nothing to think about. Just put on the trade. What do you have to think about when all your criteria is met? I mean, I use this analogy with my students. I tell them, the reason why a trading plan is so important and specific criteria is so important is because it removes as much subjectivity as possible in trading. And subjectivity is what will destroy a trader a lot of times, aside from psychology. Because think about it this way though. This is the analogy. When you have the trading plan, that's basically you're of sober mind, right? You're of sober mind. You're not intoxicated by the emotions that the market will give you. And when you're in sober mind, you create that plan. So when you are potentially intoxicated by the emotions that the market will spark in you, you can just revert back to the sober trading plan. And you have nothing left to think about. Number 22, you are making an educated guess. Again, you're not right or wrong. You can't predict the future. It's just all about, your methodology is just all about putting you in a situation where you have a higher probability of winning X amount of trades over X series. You're putting yourself in a higher probability of winning 15 out of 20 trades or 17 out of 20 trades or whatever it is. So with an expected outcome, any market information that is not what you expected will be translated into fear. So kind of paint a scenario for you. Let's say that you are, you're in a sell, you're in a short position, and you're entered and you're like, oh, it's just going to go down right from here. There's no way it can go back up. And then it goes down a little bit and then comes back up above your entry, hasn't hit your stop loss yet. You start freaking out. You're like, oh, well, what is this doing? What is this doing? This has to go down. Like, what's going on? Either you exit, or you move your stop loss farther up, or you move your stop loss farther down. One of those things, and you either get stopped out and take a bigger loss, or it'll hit your stop loss if you moved it down, and it'll go the direction you were expecting, and or you exit and it goes again the direction you wanted. That's fearful trading, right? Once you enter, once you have your criteria met, that's why you manage your risk. Your risk is managed. You have a stop loss in, have your take profit in. Get off the charts and stop thinking. Just watch. Just see what happens. You can only expect you can't expect a certain outcome. You can only expect something to happen. 25, train your mind to disconnect. There's no correlation between this trade and the last trade. Again, now tie that point to the series of trades. Over a series of 20 trades, there's no correlation between trade 10 and trade 11. Absolutely none. It's just another trade in the series. So it doesn't matter if you win trade 10 and lose trade 11. and lose trade 12, you still have 13, 14, 15, etc. to continue trading, and you're supposed to be profitable over the series. The acquisition of skills, not the money, not the outcome of money. Gain. Oh, I think I mistyped here, but the acquisition of skills, not the outcome of money, is kind of the goal. And then the outcome will be money. So with trading, a lot of times I see people focusing way too much on the money because they're, maybe they're working a full-time job and they want to get out, or they're in debt or whatever. That's fearful. That's emotional trading. You need to focus on acquiring skills, and first and foremost, the first skills you need to do is be able to read charts and be able to identify your specific methodology, your specific criteria live in the market. That's the first trade, because if you can't do that, then there's no point to focus on your psychology, right? Once you have that skill acquired, then you need to focus on disconnecting your mind from the market, disconnecting your mind from the outcome. And then once you master those skills, you're going to make tons and tons of money. Commit to taking 20 consecutive trades no matter what your brain tries telling you the outcome will be. So this will be kind of your guys' homework after this video. Even if it's on demo, demo and live trading are completely different, obviously, but just kind of get yourself in that habit of going for thinking 20 trades in a row, not this trade, next trade. It's not this trade or last trade. No, it's just a 20 series trade, a 20 trade series. Excuse me. An edge is nothing more than an indication of a higher probability of one thing happening over another. Yep, kind of already said that. So this is the trader's creed that he's put on the thing. This is not mine. This is kind of some affirmations you're going to tell yourself. Because just like law of attraction, and your subconscious beliefs and all that, when you get in a fearful state of mind, or when you take a loss and you're not disconnected from the outcomes of the market, you tap into every negative or losing experience you've ever had, and it amplifies what you're feeling at that moment. Rather than just being, okay, next trade, that's trade number 10. Next trade is trade number 11. I'm just going to wait for my criteria to be met, wait for my signal. These are pretty much it. There isn't really much else to say. It kind of sums everything up. If you're thinking in terms of a series of trades, then why are you gonna be fearful? And if you just don't care about what the outcome is, then why are you fearful at all, right? Especially when you find the point. It only takes one trader somewhere in the world to negate the position, or negate the positive outcome of my edge, right? So it only takes, it doesn't matter if you have, even if you have a 90% win rate, right? And you look at a trade and you're like, this looks like a really good trade, I've seen the specific type of setup before. It looks similar to something I've taken before that went really well. It's probably going to be a good trade. Someone, who has a lot more money, and someone that has a lot of money that can move the market, whether it's a hedge fund or whatever, it doesn't matter who it is, they can be like, what, I kind of think this is going to go, let's say, up. Let's say you're in for sales. You're like, oh, I think this is going to go up. I want to enter a buy position. And then they move the market up. Bam. That's why, right there again, you have to think in a series of trades, and you have to have you can't have an expected outcome other than the fact that something's going to happen. So just a couple other things, a lot of things that have helped me with my trading psychology is A, meditation, B, reading books. Doesn't really matter what it is, whether it's business, self-development. Those are kind of the ones I focus on, but there's obviously tons and tons of other books. And study the best in the world, and the best in the world at training and mastering their mind are monks. Think about that. So trading is really multi-sided. It's you have one aspect of very, very technical, logical, that type of left brain thinking, and those people who master that are the best people that have really good analysis or really good system. But for the other aspect, psychology, which is the most important, you have to follow somebody or some system, or read some book, or implement some habit, whatever it is that's going to help you, that's going to master your mind. And from what I found all across the world, no matter who it is, I think monks are the absolute best at mastering their mind. So start getting into people like that. Like one person that's really good is Jay Shetty. Jay Shetty is, he was a monk for a while, and then he kind of left the monastery and kind of came into the real world and was providing a lot of value for people. And just listen to him, meditate, listen to him, and physical activity, working out, especially working out before you trade or while you're in a trade to get your mind off it. Those are some really good things to implement to help remove fear and help remove all the emotion you're feeling in the market. So, yep, I really encourage you guys to watch this. Mark Douglas, How to Think Like a Professional Trader. Obviously started with one of four. There's a lot of, like I was saying earlier, there's a lot of back end knowledge that he provides that's just about trading. But yeah, these notes were just kind of my summed up notes of the videos and my trading experiences. So I hope this helps. Follow us on Instagram, Lucid Forex, and have a good day.